Okay, so hello everyone, good morning. Online students, can you please confirm whether audio and video is fine? If yes, we can immediately get started. Okay, so waiting for confirmation from online. Is audio and video fine? One second. Okay, so fine. Sorry for the delay, since this is the first class, a little bit time have taken to set up the live and all, but tomorrow onwards we'll start it on time only, don't worry. Okay, so fine. So the subject which we will be starting is nothing but corporate financial reporting. Can anyone tell me what is the paper number for corporate financial reporting? Which paper? Paper number 18. Just a minute. Okay, fine. It is very simple. It is paper number 18, corporate financial reporting. Okay, fine. I think you are already aware of the paper pattern. So we have totally, we'll quickly check the paper pattern. I think we all know that. Question number 1, what they will ask? In question number 1, what they will ask? Question number 1, you don't know? Okay, we'll open that. Question number 1, like I think same as your inter only, they will ask MCQs. So we will be having 15 MCQs. Okay. Each MCQ is having 2 marks weightage. So total 15 into 2, we will have 30 marks for MCQs. Okay, there is no choice for MCQs. Okay, fine. There is no choice for MCQs. Okay. So first question, MCQs will be there. Total 15 MCQs you have to attempt. There is no choice in MCQs. Next we are having question number 2 to question 8 we are having. So total 7 MCQs, sorry, total 7 questions will be there, out of which you have to attempt any 5 questions. Okay. This is very basic pattern. In all subjects they will follow similar pattern only. So it is very easy for you. But specially what we will be doing is, this is a paper analysis of past paper. All the past papers have been compiled here. If you observe, just exclude this December 2025, which is the recent attempt. If you exclude this December 2025, you can check all other attempts. For example, June 25, December 24, June 24, December 23. If you analyze these 4 attempts, okay, you will understand each question we are having subparts. For example, 2A, 2B will be there, 3A, 3B, 4A, 4B. But 5th question and 6th question, there are no subparts. Okay. Similarly, we will have 7A and 7B. Last question, we will have 3 parts basically, 8A, 8B, 8C. Okay. If you just check once again. So 2A, 2B, 3A, 3B, 4A, 4B. 5th and 6th, we don't have any subparts. Whereas if you check question number 8, we will have 3 subparts. Okay. We will slowly analyze the syllabus pattern and everything we will slowly analyze. But I think you guys are basically aware of the fact that this corporate financial reporting contains accounting standards, correct? I think in your inter you are already aware that we are having accounting standards. Okay, can anyone tell me few accounting standards what you have remembered then? Okay, any ASS. I think in group 1 also it is there, group 2 also it is there, correct? Just tell me any ASS what you have remembered. Sorry? Inventories. Oh, very easy standard. What is the standard number? Very good. AS2 we know. Inventories. Okay. Next, any one standard? Revenue recognition. Okay. It is AS7 basically. Okay. We have 2 standards. AS7 is also there and AS9 is also there. Both are from revenue recognition only, if you remember in your old intermediate days. Okay, fine. But whatever standards which we are learning now, they are not accounting standards. They are not normal accounting standards. They are updated version of normal accounting standards, which are popularly called as Ind AS. Okay, sir, why we are learning this Ind AS also, you will understand a little later. But just you have to understand that your syllabus comprises of only Ind AS. Okay, old accounting standards are not there. But you have to remember few differences between those accounting standards and Ind AS. Okay, for the time being you can understand like this. Ind AS is nothing but it is just a polished version of old accounting standards. Okay, if you remember that much for now, it is totally fine. Okay, rest of the things we will slowly understand. But if you keep this December 2025 side, if you analyze all these 4 attempts, June 25, December 24, June 24, December 23, 2A, 2B, 3A, these 3 chapters they will ask from Indian accounting standards. That is the standard thing which they are following. Okay, 2A, 2B, 3A. These 3 questions they will straight away ask from Ind AS. Just for the time being, exclude this December 25. Just check these last 4 attempts. You will understand all the 3 questions they will ask only from accounting standards, Indian accounting standards only. If you calculate the weightage, each sub question carries 7 marks. Okay, 2A 7, 2B 7, 3A 7, 3B 7, 4A 4B 7 each. 5 and 6 we don't have any subparts, therefore each carries 14 each. Okay, last question if you observe we have 3 questions, therefore 5, 5 and 4. Okay, if any question is having 2 subparts, each carries 7, 7. So if you calculate the weightage, then you will understand that 1, 1, 1. So 3 7s if you observe, 21 marks they are asking from standards. Okay, so 21 marks they are asking from standards. So we should not ignore the standards, very very important from exam perspective. Okay, fine. So these 4 attempts if you observe, can you identify one common standard which they have been asking in all these 4 attempts? If you understand, what is the common standard? Huh? In all the 4 attempts, first let us check. In all the 4 attempts, what is the common standard? 36 is the common standard, correct? In all attempts they are asking, which means very 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 highest important, highest priority standard is Ind AS 36, there is no doubt. Okay, other than that if you observe, what is the second standard which is asked in many of the attempts? 16 is asked 2 times, 116 is also asked 2 times, correct? Which means this 16 is also important, 116 is also important. If you observe question number 3A, 3A we cannot identify any fixed pattern, correct? Okay, 2 times they have asked Ind AS 115, but other 2 attempts they are asking new questions. According to me, this 3A question can be a little unpredictable, but generally these 2A and 2B, either they have to, this 36 though they have not missed it even in any single attempt. But if you observe 2A question, 2 times they have asked 16 and 2 times they have asked Ind AS 116. Okay, I can just keep the analysis like this for 2A, 2B, 3A. Standards ka questions, very easy questions I can say. But if you observe, this 3A is little unpredictable, but okay, it is not that much impossible, but we can slowly understand each and everything. If you check 3B, they will only ask these 2 concepts are only there. First concept is intrinsic. Okay, let us keep this December 2025 aside. So if you observe, only 2 concepts they will test in 3A. First one, goodwill calculation. Second one, intrinsic value of the shares. Out of these 2 concepts only, they will test 1 concept. That is for sure. Okay, no doubt about it. 3B question, they will only ask either from goodwill or from intrinsic value of shares. Next fixed concept, if you observe, 4A. 4A, if you observe, here also we will have only 2 concepts. First one, financial instruments. Second one, NBFC's provisioning norms. Only these things you have to remember. 4A also only 2 concepts they will test. Financial instruments, NBFC provisioning norms. That's it. They will not test any other new concept in 4A. That is for sure, we can predict. If you observe 4B, one common question which is never missed in any attempt. Even if you observe December 2025 also, what is the common question in 4B which they are asking? Internal reconstruction. They will never miss any question in this 4B concept, which is internal reconstruction. Always they will ask question from this. Okay. So if you observe 2A, 2B, 3A, 3B, 4A, 4B, I can say that standard type of questions which they will never miss in any attempt, I can say this internal reconstruction is the very first question which they will never miss. If you observe 4A also, financial instruments is the thing which is asked in last 4 attempts out of 5. In another attempt, they have asked NBFC provisioning norm. So this question is also highly predictable question. So then if you observe, my favorite topics, these 2 chapters are question number 5, business combination, only 1 single question. They will ask for 14 marks. This question also they will never miss in any single attempt. This is also Ind AS 103 only, it is missed actually. But 5th question, they will always ask for 14 marks. Business combination, which is covered in Ind AS 103. Next, this is also one common question which will be there in almost all attempts. You will not see any question paper without this question number 5, business combination. Highly important 14 marker. Next, question number 6, if you observe, another common question in all the attempts. Without this also you will never see the question paper. This is also nothing but Ind AS 110. Okay, so according to me, as of now, I can predict 3 questions for sure. Business combination I can predict, CFS also I can predict, internal reconstruction also I can predict. Next, if you observe 7A, 7B, 8A, 8B. If you check this 8A and 8B, all the attempts they are asking only one common thing, which is nothing but government accounting, which is compulsory sure short question. This is completely theoretical chapter. So if you are a student who only likes theory so much, this chapter is for you. Very limited coverage is there, but compulsory questions you will get. 8A, 8B, 5 plus 5, 10 marks you will easily get. MCQs also they will ask from this topic. Okay, so government accounting also 2 5 marks they will definitely ask. Last concept, if you observe, this 8C is also specifically related to this question they will ask either from business combination or consolidation. There is little bit interlinking with these 2 chapters. So they may ask a question either related to business combination or consolidated financial statements. Okay. So this is the thing which you have to understand. 8C also either business combination or consolidated financial statements. Out of these 2 chapters, they will ask any one question. So next, if you observe, okay, we have already seen these last 4 attempts. Now let us check this December 2025 ka analysis. If you observe, the first twist which most of the students have faced in December 2025, even I was also surprised by the institute way of asking the questions. If you observe last 4 attempts, all these 3 questions are never asked in last. If you check Ind AS 12 also they have not asked, 21 also they have not asked, 108 also they have not asked, which means most of the students also and most of the faculties are also surprised by the institute ways of asking the questions. If you observe, these 3 questions carries how many marks? 21 marks. Okay, 21 marks. Suddenly they have asked from new areas. Okay, keep these 21 marks aside. Next, if you observe this 3B, they have followed the same trend. They will either ask from goodwill calculation or intrinsic value of the shares. What is the thing which they have asked in December 25? Intrinsic value they have asked, which means it is predictable only. Fine. 4A, if you observe, this is also predictable area. Financial instruments only they have asked. We have already predicted that either financial instruments or NBFC, out of those 2 any question will come. So they have asked from financial instruments only. So this is also within our prediction only. If you check this 4B, internal reconstruction within our prediction, business combination within our prediction, consolidation within our prediction, this thing 7A, sorry I forgot to say, I think 7A or 7B. This is also, this 7A topic is related to practical aspect. Only 2 topics they will check, either EVA or MVA or VAS. Only these 2 topics will be there. VAS is nothing but value added statement. If you want you can write VAS, value added statement. Value added statement. And this EVA is nothing but, I think in your SFM it will be there, EVA and MVA. These are nothing but economic value added. And MVA stands for market value added. Okay, no need to copy, just for understanding I have written, but if you want you can copy, no problem. Okay, so this is a little practical aspect. Very predictable question. Only 2 concepts they will test. First one value added statement, second one economic value added or market value added. And they have also asked in from this only predictable area, economic value added and market value added. Fine. This 7B topic is completely theoretical. Standard questions they will ask. Okay, theory, it is little big theory, but this can also we can predict. 7B also. 8A, 8B, 8C from predicted areas only they have asked. 8A, 8B always government accounting only. They have also asked government accounting only. 8C also, if you observe, little bit Ind AS 110 linkage will be there, but that is also not that much impossible kind of a question. Okay, I have already said this number of times. What I will trust is there are always high chances that if institute wants to trick, they will trick only in these standards. Okay, how many questions you have practiced, they will do little adjustments. There are attempts where they have asked very basic questions in these attempts also. In these 3 questions also, there are many instances wherein institute have asked only basic questions. There are some instances wherein institute have tricked many students in these 3 areas. But to be on a safer side, I can say that whatever the questions, whatever the tough adjustments institute want to ask, they have already asked it in this business combination or this consolidated financial statements, which means they cannot frame any new question out of these 2 areas. Whatever the questions which are there in our material, if you cover those, there is only 0.1% chance that any new question will come from outside. Okay, but again I am saying these 2 questions, whatever tough they have to ask, they have already asked. So on a worst case, they will only repeat those adjustments, which means 14 plus 14, 28 marks are there in your pocket. If you practice these two questions, 28 plus if you observe this also will be there. So 28 plus 4 total 32 marks will be there. 32 marks plus definitely 4 MCQs they will ask. Minimum 4 MCQs they will ask from these two chapters, which means 32 plus 8, 40 marks you will easily get. If you ignore all others also. If you ignore all others also, easily you will get 40 marks. Okay, so getting 40 in CFR, even if you don't want, you will still get 40 marks. Okay, so that is not our objective. So don't settle with only 40 marks in corporate financial reporting. Because I can say that this corporate financial reporting is nothing but a sure shot exemption paper. If you are writing both groups also, this will help in clearing both the groups. Even if you are writing a single group also, there are high chances that it will give you exemption and it will help in clearing the total group also for the sure. Okay, so stay with that mentality only. Second type of students, what they will do is, whoever they are good at theory, they will prepare these theory questions nicely. Theory means this 7 marks you will get, this also 7, this also 7. So 3 7s 21. 3 7s 21, and next see, this is very predictable question. Correct or not? Only internal reconstruction they are asking. 4A also, if you observe, predictable question, which means 21 plus these two questions plus 14. So total 35 marks are there in your pocket. Even if you just check past paper, even if you just check past MCQs also, easily you can able to attempt at least 8 MCQs for sure. Repeated MCQs, there are high chances to be asked in the exam. Of course, some MCQs, like for example 2 to 3 MCQs, they may ask new, but rest of the MCQs, basically they will ask from repeated set only, which means even if you prepare this theory part, even if you prepare this theory plus these two questions plus MCQs alone, and if you check this part also, EVA and MVA, this is also predictable area, another 7 marks will be there, which means minimum again you will get 42 to 45. Whatever strategy you follow, you will aramse get 42 to 45. That's what I'm saying. Even if you don't want, you will still get 40 to 45. That is for sure. If you just keep little bit efforts, easily you will get 80 also in CFR. 80 is also very simple. But you just have to be strategically prepared. Okay. So this is my observation from the recent attempt, which is December 2025. Since they have asked these 3 questions unpredictable, whatever rest of the paper which they have given, that is complete easy paper. Okay, this business combination, very basic question. We will understand. I will definitely explain all these questions also. So whatever the questions which they have covered in December 2025 also, we will cover whenever we are discussing respective chapter. But my point is, basic questions only they have asked, because these 3 questions are new to us. Therefore, they have given rest of the paper very easy. But some students, I know that most of the students will take these 2 choice. So students who have really taken these 2 chapters choice, they have suffered a lot. But even if you watch my revisionaries also, which I have uploaded with respect to these 2 chapters, I have been saying number of times, don't take these 2 chapters choice. Today also I will say the same thing, because these 2 chapters are only the saviors of the last attempt. Not only this, if you observe any of the attempt, the thing is, whatever tough questions they have to ask, already they have asked. They will only repeat those questions. That's it. Okay, unnecessarily most of the students are making complicated themselves only by taking these 2 questions as choice. But you will not do that. I already know that. Okay. So fine. This is the past paper analysis of all the 5 attempts, we can say. This is totally fine. But what we will be doing is, no need for you to write this. I will share this soft copy with you if you need. So don't worry, no need to copy this. Okay. So let us come to chapter wise breakdown of our syllabus. Okay, this you can write somewhere. This is also there in your study material only, your board book only, this is there. But if you want, you can write this thing. Okay, so whatever the paper pattern which I have discussed, the same thing has nicely given, how the institute have broken down the syllabus, that is given here. Okay, so first I will explain, then you can copy. The institute have divided totally into 6 sections they have given. Okay, so first section A is nothing but Indian accounting standards. 2A, 2B, 3A, they will ask only from these Indian accounting standards. Okay, second thing, if you observe, they will ask about valuation of shares, accounting and reporting of financial instruments, and NBFCs. Okay, if you check now, this 3B is nothing but share valuation. In this share valuation only, we will also learn how to do the goodwill valuation also. Okay, so 3A they will ask from share valuation. If you observe 4A, reporting of financial instruments and NBFCs. See, if you check this 4A, there are high chances either financial instruments or NBFCs. So both are categorized into section B. I will give time to copy, don't worry. Section C, if you observe, we are having business combination also and restructuring also. This restructuring is nothing but internal reconstruction. Okay, this restructuring is nothing but internal reconstruction. Section D, if you observe, consolidated financial statements and separate financial statements. Section E, recent developments in financial reporting. Just be familiar with these names. Nothing I have explained till now. If you observe, I have not explained the meaning of financial reporting also. Correct? We are just discussing the paper pattern and we are just aware of whatever the syllabus which is there. Section E, recent developments in financial reporting. This is covered in 7th question basically. This 7A and 7B are from this section 5, which is recent developments in financial reporting. Section F is nothing but government accounting in India. 8A and 8B they will ask from these two areas. Okay, fine. So here if you want, I will write like this also. Indian accounting standards they will ask from 2A, 2B and 3A. Okay, this valuation of shares ka part they will ask in 3B and 4A. This restructuring they will ask in 4B. This business combination they will ask in question number 5. Consolidated financial statements, question number 6. Recent developments they will ask 7A, 7B. Government accounting 8A, 8B. 8C they will ask either from section C or section D. Okay, so please copy this. While copying, just make these names of the chapters familiar with you. Okay, so section A, Indian accounting standards, valuation of shares, accounting, reporting, accounting for business combination, all these topics I will just give 2 to 3 minutes of time. Please copy all these 6 sections along with the names also, and just try to remember, just try to go through what these talk about. Still I have not explained the meaning of corporate financial reporting also. I will explain everything. Just copy this part. If you have already copied, just go through these names just to make yourself familiar with these topics. Right now you have to write the full names of this: consolidated financial statements, separate financial statements, recent developments in financial reporting, government accounting. All these you have to write full names. But once we have started these chapters, I will also discuss the shortcuts also, which you have to write. Okay, if I discuss those shortcuts now only, you will never remember these things. Okay, so that is the reason. Write fully. I will discuss the shortcuts later. Online students also, have you copied this sections F, section A to section F? Have you copied? If yes, then we will move further. So those who have copied, can you calculate and tell me for how many marks our paper will come, including choice? How many marks? 128. Okay, very good. So from these total 128 marks, how many marks we have to get to pass? Only 40 marks. Even in worst case also. Even in worst case, if you just only do selected study also, still you can get 40. Okay, so that's what I'm saying. Getting 40, especially in this CFR. Even if you don't want also, still you will get. If you just listen to classes, just do some practice, you will easily get that 40. Okay, but my objective is never to get 40. My objective is minimum you should get 90 plus. Okay, 80 to 90, that should be your objective. There is no doubt about it. While going through the curriculum, you will slowly understand how much easy it is. Unnecessarily, you are only making it complicated. Sir, how we will make complicated? First of all, we won't listen classes. Second, we will listen, just listen. We won't participate, we won't do anything. Third, we will listen, we will respond, but we won't practice. All these three you have to do, then only you will get 90. Easily you will get 90. Okay, accounts is very easy subject. Okay, those things I will explain when you go through the subject. Fine. See, now let us go through detailed breakdown of all these sections along with weightage. Okay, this also no need to write. I will share the soft copy, but just try to listen. What is our total weightage? Tell me. 128. From these 128 marks, how many marks you will get from these specific accounting standards? These specific accounting standards are nothing but these 2A, 2B, 3A is there. Na? Complete Ind AS questions only they will ask. Complete standard questions. If you observe, can you calculate and tell me 128 into 25%? Calculators. Open calculators. This is not theory. Online students also have to respond. Otherwise, I will stop the live. I want responses. Many students are there. Are you sleeping or what? Are you there? Please respond online. Online. Okay, so 128 into 25%. How much? 30. Including MCQs also. This is the maximum weightage. Okay, this is the maximum weightage they can ask, including MCQs plus those 3 questions. If you observe, you will get 32. Okay, see, how many standards are there? Just count and tell me. How many specific Indian accounting standards are there? Just count and tell me. 12 Indian accounting standards are there. So, from these 12 accounting standards, they will ask questions from 3 accounting standards, that is for sure. Okay, so do we have to study all these 12 accounting standards with equal importance? Answer is no. Okay, this is not donkey work. I think you have understood the word donkey work. Okay, donkey is what we will do. How much weight you have dump, it will carry. Okay, we are not donkeys. So no need for us to give equal importance to all these standards. Okay, of course we will cover all those standards, but whatever the standards which are very, very important from exam perspective, we will cover them in very detail. For example, if you observe this Ind AS 16, 116, 36, 38, 115, okay, all these standards, so we will cover. Sir, but what about other standards? See, if you observe, highly unpredictable standards are there, na? 12, 21, 108. If you observe, those are very, 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 very in-depth standards which we have to understand. But we will not waste our time going in-depth into all those standards. See, in this attempt they have asked. But if you check the last 4 attempts, they have not even touched upon any of these 3 standards. Okay, like this, okay, some chances, some standards are there where we cannot make predictions. So that is the reason why I am saying we have to always do the complete coverage of the syllabus. Okay, sir, but what you are saying, are you saying that we will leave some miscellaneous indices? No. Whatever miscellaneous indices are there, that we will only discuss from exam perspective. Okay, only few questions we will solve. Only few questions we will solve, and whatever the concepts which are important from exam, I will cover those standards also. Okay, we will not leave anything, but whatever highly important, we will cover in depth. But if there are any other standards which are not that much important from exam perspective, we will just only go through important concept and then questions. That's it. Okay, fine. Next, 12 indices are there totally. Okay, fine. Out of these 12 indices, according to me, 6 indices you have to go in depth. 6 indices you have to go in depth. Sir, what are those 6 standards also? I will explain. If you check this Ind AS 16, no choice, we have to go very, very in depth. 116 also we have to go in depth. Next, if you observe, intangibles also, 36, impairment also we have to go in depth. Next, 115 also, very, 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 very important standard. Okay, but see, 102 also is little bit important. Whatever the standards which they have asked in last attempt, if you check Ind AS 12, 21, okay, 108, these are B category standards only according to me. Sir, but in the last attempt they have asked, yes, only in the last attempt only they have asked. But most of the students, I can say that 90% of the students have failed to study these 3 standards. But all the 3 have come at once only. This will not happen in all attempts. Okay, only 1 attempt out of 5 or some 4 attempts they can ask these type of questions. But okay, we will not leave anything, we will cover, but not that much in depth. But whatever the other standards which are there now, Ind AS 8, I can categorize this as C category. Ind AS 8, 23 also little bit C category I can say, and this Ind AS 113 also I can say C category. This kind of category analysis also I will provide later. But first what I am trying to explain is, out of this 12 indices, out of this 12 indices, what are there? We will only cover, in depth we will cover few indices. Okay, in depth means, how many indices we will cover is basically some 6 indices we will definitely cover in depth. Other than 6, whatever other standards which are there, we will just study only those things which are important from exam perspective. Okay, and we will devote more time to solve the questions. Okay, fine. Next thing, section B, if you observe, this is I have taken only from your study material only, so no need to copy, just listen what I am saying. Section B, if you observe, we have 3 aspects. First one is valuation of shares, accounting of financial instruments, and third one NBFC is provisioning norms, accounting and reporting. Section C, accounting for business combinations and restructuring. See, this is the weightage which is also given by the institute only, but there is no hard and fast rule that always they have to follow this. No, it is not like that, because these are professional exams going on. We cannot select only few things and I can predict only this. No, it may not happen always in all the exams. Okay, sometimes we can predict, but This weightage, even though this is given by the institute only, there are high chances that institute only will follow this or not. Okay, but little bit deviations. For example, out of this 15, they may give 18% or they may give 12%. Like this, here and there, they will make the adjustments. Okay, so section C, this I have just given the detailed breakthrough of all the concepts which are there in business combination. This no need for you to remember. Okay, this we will cover whenever we will move to respective standard. But this section C weightage, how much they will cover? 20% of the total weightage. Total weightage means 128 you have to calculate. 128 into 20%, how much it is? 128 into 20, 25 approximately. Similarly, consolidation also 20%. How much? 25, huh? So 25. Recent trends 10%, government accounting 10%. Okay, so that's it. So today we will not discuss more. We have just observed the paper pattern. Okay, if you observe, see here I have only discussed descriptive part. Sir, what about MCQs? MCQs, if I just explain here and there, it may not make a meaningful analysis. Okay, so somewhere they will ask indices, somewhere they will ask government accounting, but trend we can identify. That trend also, even if I say now only, you will not understand anything. So that is the reason why I have discussed only descriptive part here. Okay, so how many questions we will have? Question 2 to question 8. 2A, 2B, 3A, they will ask from indices only, specific indices only they will ask. So according to me, little bit trickier part is these questions only. I am not saying these are impossible, no, little bit trickier, that's it. Okay, if you observe 3B, same kind of question they will ask. Either they will ask goodwill calculation or they will ask intrinsic value of the shares, that's it. 4A, only financial instruments or NBFCs. We can easily predict this. 4B, there is nothing, no attempt they have missed this internal reconstruction, always they have asked this concept. 5 also, business combination, always they have asked. 6 also, consolidated financial statements, always they have asked. Okay, so 7A, 7B, if you observe, recent trends in financial reporting topic they have covered. Okay, so EVA and MVA, and this also little bit theoretical part. And if you observe this last 8 question, 8A, 8B, 8C. Okay, so 8A and 8B they have asked about government accounting, and last 8C little bit interconnection between business combination or consolidated financial statements. Okay, so that's it. We have not discussed anything much. We have just analyzed the paper pattern. If you want, I will share this soft copy in the group. But what you just have to check is this, go through the chapter breakdown once again. This is already there in your institute workbook. Okay, just download the workbook for the timing, or no problem, I can share this also as soft copy. Okay, just go through whatever I have written. And your work for today is basically you just have to remember these standards names. That's it. These standards names are little bit fancy. If you just observe the names, accounting policies, accounting estimates, errors, leases, effects of changes in foreign exchange rates, impairment of assets, share-based payments, operating segments, revenue from contracts with customers. Just don't worry about the meaning because you don't know anything. Just these names are little bit fancy. So just go through these names and try to remember the Ind-AS names. That's it. Okay, fine. Just remember the Ind-AS names and then just go through the section wise pattern and all. Okay, so that's it for today. Till now, I have not explained what is the meaning of corporate financial reporting. We don't even know the name of the subject also. Okay, all those things will be continued in the next class. So tomorrow I will explain why we are having 2 standards, because in our inter we have studied accounting standards, but suddenly in final why we have to study something which is called as Ind-AS. Okay, so all those reasons and all, what is the reason for the introduction of Ind-AS, and do we have to know both AS also and Ind-AS also in practical life? Okay, and all these things we will continue in the next class. Okay, but so today what you have to do is just go through this section, standard names and standard numbers. Okay, so just you have to remember that thing. So on balance things we will continue in next class.
Okay, so listen. Good morning. In last class, we have just understood the paper pattern. We have analyzed almost last 5 attempts and we have tried to predict the trend. Okay, so we'll just quickly see what all the things which we have covered in last class and we will start further. Okay, so if you observe, we understood that first question we will be having MCQs. So 15 MCQs will be there. No choice in those MCQs that we have understood. And then if you observe question number 2 to question 8, okay, so total 7 questions are there, out of which we have to write any 5 questions. Okay, and then we have understood this 2A, 2B, 3A, they will ask from which topic they will ask. They will ask from specific Indian accounting standards. Okay, this 3B part we have understood, either intrinsic valuation of shares or goodwill. Out of these 2 topics, they may ask 1 question. If you check this 4A also, only 2 aspects they will test, either financial instruments or NBFC provisioning norms, out of which almost in 4 out of last 5 attempts they have tested only financial instruments concept. But if you check 4B, the thing which they are testing is basically internal reconstruction. And if you observe this question 5 and 6, not even a single attempt they have skipped. Even if you observe this 4B, 5 and 6, all these 3, okay, all these 3, even in any one of the attempt also they have not skipped any question. And then if you observe this 7A and 7B, it is about, we have understood that this 7B, 8A and 8B, all those 3 are basically government accounting also theoretical portion. Okay, so last concept if you observe, it is also, we have interlink between this business combination and consolidated financial statements also. So this is the thing which we have covered in last class, and I asked you to remember the section names in last class. Okay, so let's once again quickly go through this. I have not explained all the things in this standard, but I just ask you to remember the content. I mean, what is the name of the standard and what is the standard number. Okay, so let's quickly check this and then we'll move to the introduction part as to what is the meaning of corporate financial reporting and why we are having 2 set of accounting standards and all we will discuss slowly. Okay, so just a minute. Okay, so check this. So the first standard which is there in our syllabus is nothing but Ind AS 8. So here what they will say is, if there is any accounting policy, if there is any accounting estimate and if there is any prior period error, you have identified that one error is there in previous years or even in current year also. So how to rectify that will be explained in this Ind AS 8. Okay, so details I am not going, I am just explaining the basic thing only. Details we will have when we discuss the respective standard. Okay, so check this. Income taxes, it is covered in Ind AS 12. Okay, so have you ever heard the name which is called as deferred tax? Anyone? What is the meaning of deferred tax? Tell me. There is no right or wrong. You can just respond. Very good. Super. So I think you guys have already know that as per accounts, the treatment will be different as per books of accounts, and as per income tax, the treatment will be different. If you observe, the very fundamental difference is depreciation. If you observe, we all know that depreciation as per accounts is different and as per income tax is different. If you remember, we will follow block-wise depreciation in income tax. Block-wise depreciation, and we have to follow only WDV method of depreciation. SLM is allowed, but only for few entities only SLM is allowed. So for most of the entities, what you have to choose income tax, depreciation, that is also block-wise only we have to choose. Okay, so more details we will go later, but currently what you have to understand is, because of the differences between accounts and income tax, there is a difference in your tax liability. So there may be chances that you have to pay more tax in the future, or there are chances where we have to pay less tax in the future. In both these cases, whatever the difference which you are getting, that is because of one item which is called as deferred tax. Okay, so how to do the accounting and all we will understand when we discuss this respective standard. And next, if you observe this PPE, what is the full form of PPE? PPE is nothing but property, plant and equipment. I think this we already have one accounting standard in your inter level also. Okay, so same to same, almost 90% of the standard ka content is copy paste. But this time we will try to understand in a more logical manner. So this PP is also very easy standard, and we have understood this is an A category standard because high chances that question have to come from this area. Okay, so next if you observe leases. Okay, I think this leases also we have similar standard in your inter level. So can you tell me how many types of leases are there? Very good. So we have operating lease and financial lease. So similar kind of standard, but as per Ind AS, this is very comprehensive standard. So whatever you have studied at inter level, at that point of time, whatever you have studied is correct. But when it comes to this Ind AS, it is very comprehensive standard. And according to me, at CA final level, if you observe this Ind AS 116 and this Ind AS 115. Very comprehensive standards, but our institute CMA is not asking that much next level questions, but in future they will definitely ask. Okay, so we should not take any choice in this. We will try to cover the maximum portion of these standards, which is Ind AS 116, Ind AS 115. These are very important because these are recently drafted standards. Recently as in these are drafted some 4 to 5 years ago. Okay, so very latest standards, this 116 and 115, so highly important from exam perspective. Next, if you observe this effects of changes in foreign exchange rates. Assume you have purchased any goods from foreign currency. Assume you have purchased any goods from foreign person. So obviously you have to pay in foreign currency only. On the date of purchase, it is the foreign currency, the exchange rate may be different. On the date of payment also exchange rate will be different. So how to do the exchange loss and gain, what is the accounting treatment and all will be explained in this standard, which is Ind AS 21. So similarly, if you observe this borrowing cost also, I think this standard is also there at your inter level, borrowing cost. So if you remember, qualifying asset will be there. So whatever the borrowing cost which is related to that qualifying asset should be capitalized and all we have learned in inter level, but no problem. Even if you don't know anything, I will try to explain from the very basics itself. I will assume that you don't know anything only. So from on that aspect only we will continue. So this one Ind AS 36, I think this is complete new standard to you. You have not heard this term called impairment earlier, correct or not? Have you heard anyone? No. Okay, so impairment is very important standard. We have to learn in depth with respect to this part. Intangible assets 38, I think this also is there at your inter level, intangible assets. Okay. Another new standard, share based payments. This is also very important standard which is covered in Ind AS 102. Ind AS 102. Okay. So next also these two segments are also, I think these two standards are also completely new to you. అయితే విండోస్ ఓపెన్ చేస్తారా ఆఫ్లోనే ఓపెన్ చేయండి. ఓకే, సో దిస్ 108 and 113 and the last standard is nothing but revenue from contact with customers, Ind AS 115. Okay, so fine. These topics I will cover only while we'll discuss the respective topic, but basic overall view I can give. Section B, if you observe, we have basically three aspects: how to do the valuation of shares, what is the meaning of financial instruments. This is also very comprehensive standard. Basically this will be covered in Ind AS 109. Okay, so this also we have to understand in depth. There is no choice in this also. And NBFCs accounting. NBFCs is very simple. If you remember in your inter you have something which is called as banking companies. Okay, so have you remembered the word NPA? NPA, what is the full form of NPA? Non-performing asset. Okay, so how to do the provisioning for that? If you remember, there are specific percentages, some 0.4%, 0.25%, 1%, okay, 100% if it is a doubtful asset, if it is a loss asset, like this some percentages will be there. Even the similar type of percentages also will be there in this chapter also, which is NBFC. Okay, so this is also fine. These are very, very in-depth, which we have to understand. So these are my favorite chapters, this section C and section D. Consolidated financial statements and business combinations. I have been saying from the starting itself, these two chapters, whatever tougher questions they have to ask, they have already asked it in the past. So same repeated questions only they are going to give in your exam also. Okay, so you have to understand these topics also very nicely. We will cover them. These two are theoretical topics. In this, one practical question will become, if you observe, I have already explained in the last class that here they are going to cover EVA and MVA. Okay, what is the full form of EVA? Economic value added. And what is the full form of MVA? Market value added. Okay, so these two, one practical question will be there, others theory question. This government accounting is completely theoretical portion. Okay, so fine. We have stopped here in the last class. So now what we'll be doing is, let us start with the subject. What exactly is the meaning of corporate financial reporting? Okay. Online students also have to tell me what exactly is the meaning of corporate financial reporting. I'll give 1 minute of time. So whatever you feel, what is the meaning of corporate financial reporting? Please mention in the chat box. What exactly is the meaning of financial reporting? We have to understand. There is no right or wrong. So whatever you know, try to tell. What is the meaning of financial reporting? If you understand this, only then you will understand why we have to study this subject. Okay, fine. So just 1 minute, go through this and you have to tell me. You also, what is the meaning of financial reporting? Just what you know. Why we have to learn this subject, financial reporting? Very good, very good. Some student is saying what is how the financial statement should be prepared and all will be understood through financial reporting. Okay, very good. Next, any other answer? Okay, online students, some students have replied that in order to understand the company's financial position, we have to study this financial reporting. Okay, that is also correct. That is also correct. Any other answers, online students? 7 students are there, but only 1 student is replying. If you don't reply, I will take out all your names. Okay, so listen, corporate financial reporting is nothing but, it is very simple. So whatever financial results of the company, what you have got, communicating the financial results. Financial result is nothing but whether the company is having profit or loss. This also we have to explain. And what exactly are the assets and liabilities of the company. So this is called a statement of financial position. And according to that, we also have to communicate the what is the exact status of the entity, whether the company is having profits or whether the company is having losses and all also you have to understand. Because assume you are an investor who is having some 1000 crores of surplus funds. You don't know where to invest. Okay, you have some list of companies Assume you have some list of 100 companies which are there. You just only know the names of these companies. Can you invest in any of the companies just based on those names? Answer is no, correct? You have to dig into details. Details as in you have to understand whether the company is making profits or losses. On this aspect also you will inquire and you will make a meaningful decision. Next, what is the liquidity of the company? What exactly is the, see, while giving share capital or while investing, you will ensure what is the liquidity status of the company, which means how many loans are there for the company. If I invest in the company, will the company be able to repay me or not? All these things you will check. On what basis you will check all these things? Definitely on the basis of financial statements. Correct? Definitely on the basis of financial statements only you will understand whether a company is performing good or bad. Whether if you invest, whether I will be able to get my money back or not. So all these things will be understood only through this financial statements. Now, since we have used the word financial statements, you have to tell me what is the meaning of financial statements. What is the meaning of financial statements? Very good. Tell me. Online students also. How many financial statements are there? How many components of financial statements are there? Please respond fastly. How many types of financial statements are there? How many components basically? I think you all know how to prepare financial statements. In your inter, I think balance sheet will be there. Profit and loss account will be there. Next, what will be there? Cash flow statement also will be there. What is the last component? Most of the people will ignore, but we have something which is also called as notes to accounts also. This is also an integral part of the financial statements. Okay. So most of the students are saying, okay, correct answer only. So the first important thing is balance sheet that you have to understand. Second important thing is profit and loss. Third is cash flow statement, and last, notes to accounts. Okay. So all these are nothing but integral components of the financial statements. Very good. Very good. All the students are responding, which means it is correct. Okay. So then what you have to write is you can start writing along with me. Okay. Online students also start writing along with me. So first let us understand what is the meaning of financial reporting. Let us write that. Financial reporting is nothing but communicating the financial position of an organization through entities financial statements. Through financial statements, whatever the financial position which is there, we have to communicate. Sir, communication should be made to whom? To all its stakeholders. To all its stakeholders. Stakeholders including shareholders also will be covered. Management also will be covered. Creditors also will be covered. And even the government is also covered. Debtors are also covered. Everyone will be called as stakeholder only. If he has any relation with the company, any financial relation if he is having, he will be called as a stakeholder only. Okay, see, this is the meaning of financial reporting. If you observe, so whatever the financial position of an organization which is there, we have to communicate that financial position through entities' financial statements. I am not saying orally my profit is 1 crore rupees. I cannot say orally. I have to present in the form of financial statements. To whom I have to present? To all the stakeholders I have to present. Okay. For shareholders, it is very important because they are the only persons who are investing in the company. Correct. So shareholders definitely have to go through this financial position. So why financial statements are important for management? Why it is important for creditors? And why it is important for government? If you observe, whether the management have to plan for expansion, if the company is earning more and more and more profits, then the company may choose to go for expansion. If the company is making continuous losses, then it may follow retrenchment kind of a strategy. If any one product is continuously giving losses, so what we have to do as a management, we have to discontinue that product. Correct or not? If we discontinue that product, probably we will move into a better position. Similarly, if you are a creditor, you will understand whether to supply more goods to that person on credit or not by looking at the ratios. If you look at the liquidity ratio, if the liquidity ratio of the company is good, then probably I am ready to supply the goods on credit. Okay, see, the company has a history of not making the payments, for example, assume the due date is 30th June. The company has the history of delaying these payments by 6 months. Always it will make delays only. So am I interested to supply the goods on credit to the company? Answer is no. Correct? Simple things. Because of some ratios and all, it is important even for the creditors also. And not only these persons, if you observe the government, for government also financial statements are important because you all know that income taxes on the basis of profit only, but we have to do some adjustments and we have to calculate the income as per Income Tax Act. Okay, but what is the basis for that also? Financial statements only. Okay, so for all these entities, communicating the financial position is very, very important. So that is the reason why we have to learn this financial reporting. Okay, next thing. So next point you have to keep rules for preparation of financial statements. Rules for preparation of financial statements. Rules for preparation of financial statements. Okay. So now you have to tell me, are there any standard rules, standard formats for preparing financial statements, or you can prepare whatever you want? Is it like that, or there are standard rules or standard formats you have to follow? Schedule 3 is there, correct? Okay, so there are few rules based on which only you have to prepare financial statements, correct? So you cannot just prepare, okay, I will just like sales, some 10 lakh rupees, okay, minus purchases, some 5 lakh rupees, like this as and wish I cannot prepare financial statements. There is certain format which you have to follow. Now my second question is it mandatory to follow those rules or it is optional for the company? Which means whether if it wants, it have to follow, or whether it is mandatory that you have to always have to follow these rules and all. Always. Who said that it is mandatory? Who said that? Companies? Okay. Are you specific with whatever the rules which are there? Okay. So fine. So you already have yes, online students are also responding. We have to follow as per schedule 3. Okay. So it is totally fine. Now you have to understand most important thing that write along with me. MCA notified the following 2 rules for the preparation of financial statements. For the preparation of financial statements. Okay. So you always have to remember, we are totally having two rules. First rule what you have to understand is companies accounting standard rules, companies accounting standards rules, comma 2006. Companies accounting standards rules 2006. Okay, these are amended to companies accounting standards rules 2021. Companies accounting standards rules. Earlier we are having 2006 rules, but these are amended to companies accounting standards rules 2021. Here they will mention, if you are a company, you have to definitely prepare your financial statements on the basis of accounting standards only. Okay, so here also you have to write one thing, that see, you have to understand another thing also, that as of now, practically speaking, you have to understand that for few companies Ind AS are applicable. There are some another companies for which AS is applicable. If you are a partnership firm, then for you also, most of the partnership firms AS are only applicable. Okay, but for which companies Ind AS is applicable, for which companies AS is applicable, we will discuss a little later. But as of now, you have to understand, practically speaking, AS is also followed, Ind AS is also followed. Okay, if you do articles, in articles you may understand that for most of the entities, if anyone is engaged in preparation of financial statements and all, you will find that most of the cases you will find this AS companies only, because big listed companies and big unlisted companies also, whose net worth is very huge, whose turnovers are very huge, only for those companies only Ind AS is applicable. Okay, so currently you can remember like this: if the company is a listed company, or if the company is a big company, for that Ind AS is applicable. So what exactly is the meaning of big company, that we will understand a little later. Okay, but practically speaking, both standards are applicable. Okay, so here we can write companies accounting standards rules 2021 for small companies which follows AS, for these companies we have to follow accounting standards only because of these rules. These rules are saying that if you want to prepare financial statements, you have to definitely follow this accounting standards. And the format is given in division 1. This is also important. Division 1 of Schedule 3. Division 1 of Schedule 3 to the Companies Act. Division 1 of Schedule 3 to the Companies Act 2013. Okay. For small companies which follows AS, you have to prepare financial statements only on the basis of Division 1 Schedule 3 to the Companies Act 2013. Okay. But another thing is, we also have to remember another set of rules also, which are nothing but companies Ind AS rules. Companies Ind AS rules. These are given in 2015. These are given in 2015. We can remember like this. These are applicable for listed companies. These are applicable for listed companies and large companies. Listed companies and large companies which follows Ind AS. Which follows Ind AS. Okay. Because of these rules, companies Ind AS rules 2015, if you are a listed company or if you are a large company, you have to follow Ind AS. Okay, sir, where they have given the format to prepare the financial statements if I want to follow Ind AS. See, here division 1 of schedule 3 is saying you have to prepare financial statements only when accounting standards are applicable. But for Ind AS, they have to prescribe the different format because both the formats are going to change. I will open the schedule 3 also. I will compare whatever the earlier format which you have learned at the time of your CMA inter. Okay. And I will compare that with whatever the new format which we have to learn at CMA final. So do we have to remember both? Answer is no. Only whatever is applicable for Ind AS you have to remember this. But in order to understand and remember what is applicable for Ind AS, definitely you have to just go through this old balance sheet format. Okay. Have anyone remembered the old balance sheet format? This I know where it will start. Okay. I will ask, you have to tell, don't worry, but first let us complete this part and then we will move. So check this. Sir, where the format is given, the format is given in division 2 of schedule 3. Division 2 of schedule 3 to the Companies Act 2013. Division 2 of schedule 3 to the Companies Act 2013. Okay. So check this. Till now we have not understood much. We have understood very little part only. So let's quickly go back and refer what we have written. First we have understood the meaning of financial reporting. Financial reporting is nothing but communicating the financial position of an organization through financial statements to its stakeholders. Okay, stakeholders means who are covered in the stakeholders? Shareholders are covered, management is covered, creditors and government also is covered. Rules for preparation of financial statements. MCA have notified 2 rules. Because of these 2 rules only we are learning accounting standards. Okay, because these rules have mandated companies to follow accounting standards. That is the reason why we are learning accounting standards. Otherwise, if these are optional, no companies will follow accounting standards. Correct or not? They have to employ either a CA or CMA to prepare their financial statements. Correct? That much cost why they will incur if it is optional. Since this is mandatory only, every company have to follow these rules. Okay. If you are a AS compliant company, you have to prepare financial statements on the basis of format which is given in Division 1 of Schedule 3 to the Companies Act 2013. But if you are a company for which Ind AS is applicable, you have to prepare financial statements as per Division 2 of the Schedule 3 to the Companies Act 2013. Okay. Just to highlight these 2 parts. If you are a listed company and large company, for you Division 2 of Schedule 3 is applicable. If you are a normal company for which AS is applicable, then for you Division 1 of Schedule 3 will be applicable. Okay. Try to bring different colored pens, highlighters, just to give some life to whatever book you are writing. Okay. Later we have to refer that number of times. Okay. So rules also we have understood. I will open Schedule 3 also. But before that, let us write another point, which is third point. Sir, what is the meaning of financial statements? Meaning of financial statements. Meaning of financial statements. First, let us understand Division 1 of Schedule 3. What is the meaning of financial statements? And we also have to understand Division 2 of Schedule 3 also, what is the meaning of financial statements. Okay. Division 1, which means whatever you have already known earlier, which means Division 1 is already applicable for AS compliant companies. Division 2 is applicable for Ind AS compliant companies. In Division A, sir, what are the things which are there? What are the components which are there? You guys have already know that. The first thing, balance sheet will be there. First thing, balance sheet will be there. Second thing, statement of profit and loss. This also will be there. Statement of profit and loss. Third one, cash flow statement. Cash flow statement, which is called as CFS shortly. Cash flow statement. And last one, notes to accounts. Very good. Notes to accounts. These four components are nothing but financial statements of AS compliant company. Okay, if you are a company for which accounting standards are applicable, there is no doubt that you have to prepare all these four components of financial statements. Next. Sir, what about Division 2 of Schedule 3? Now I am a big company. Assume I am a listed company. For me, Ind AS are applicable. So you should not follow Division 1 format. Now what you have to follow? You have to follow Division 2's format. Okay, so quickly write what are the components of financial statements as per Division 2. First one is balance sheet is common. Balance sheet is common. Statement of profit and loss is also common. Statement of profit and loss is also common. And third one is a little bit new to you, which is nothing but statement of changes in equity. Statement of changes in equity. Fourth, fifth are common. Cash flow statement. And last, notes to accounts. Last one, notes to accounts. Okay. We will understand, sir, what exactly is the format for balance sheet which you have to follow. Because in certain chapters, for example, if you observe business combination and CFS. See, this CFS is different, consolidated financial statements. This CFS is cash flow statement. In these two chapters, they will ask you to prepare the balance sheet. That balance sheet should be prepared based on Division 2 of Schedule 3. In order to prepare balance sheet as per Division 2 of Schedule 3, we have to know the format. How we have to start? What is the first line item which will be sitting in balance sheet? That we have to understand. Similarly, statement of profit and loss also we have to understand. This also is completely revamped when it comes to old accounting standards profit and loss format. Okay, so this also we have to definitely understand, and this is completely new. Statement of changes in equity. This is not there in earlier accounting standards. So this also we have to learn. And last two are little bit same only, cash flow statement and notes to accounts. Okay, fine. So now what we have to do is, what I will be doing is I will be opening. Okay, first you have to tell me whatever the balance sheet format which we have studied earlier. What is the balance sheet, whatever the balance sheet format which we have studied at your CMA Inter, you have to tell me what is the first item which we have to write. What is the first item? liabilities we have to write up. Okay, so just tell me what we have to write. First liabilities, first capital. So since it is a company, we will have something called as share capital, correct? Okay, next. Very good. Reserves and surplus also will be there. Next. Equity portion is completed. Shareholders funds are done. Next, what we have to write? You are saying very generally, but there is a little format which we have to follow. Okay, so next what is that? If you observe, long-term liabilities will be there. First, non-current liabilities will be there. In that non-current liabilities, we will be having grouping. Trade payables will come. Okay, long-term liabilities will come. Loans will come. Next, if you remember, deferred tax liability also will be coming. All these items will be coming. This, what we have understood, is there basically at your accounting standards, which means at your CMA inter level. So that format first let me open. No need to copy this. This whatever the format which we have learned in inter, I will just make you go through, because you have to remember few things. Only if you understand that, only if you remember that, then only you will exactly understood what exactly are the new things which we have to remember in this new format which we are going to learn. Okay. In order to make that very clear, let us quickly come to schedule 3. Okay. First read this part. Schedule 3 division 1. Just read this part. Okay, first read this part. If you observe, this is nothing but schedule 3. This is schedule 3 of Companies Act only, division 1. Division 1, where they will say is, these are nothing but financial statements for a company whose financial statements are required to comply with the company's accounting standards rules 2006. These rules only are amended. Okay, that point we have already written. But what I wanted to say is, if you open schedule 3 of the Companies Act, and if you open this division 1, then we will understand whatever the format which they have given, that is only for those companies which are required to comply accounting standards. Okay, there if you go, part 1 will talks about balance sheet. Part 1 will talks about balance sheet. If you observe, the first line item which will be there is nothing but equity and liabilities. Equity and liabilities. What is the first? In that also, first we have to write the shareholders funds. First we have to write shareholders funds. I think you already know that we have 2 different types of shareholders. First one equity shareholders, second one preference shareholders. Both capitals, equity shareholders funds also will come in shareholders funds only. Preference shareholders funds also will be coming in shareholders funds only. So in this shareholders funds also, what is the first line item which we have to write? Share capital. Second we will write reserves and surplus. Second we will write reserves and surplus. I am not going into in-depth. I will just explain here and there. Just explain the terms so that we will compare this with our Ind AS balance sheet. There I will explain everything, because you have to remember this thing only. Okay, but just for comparison, you have to also know this thing. Okay, so if you observe this money received against the share warrants, we will not write anything in this column. Just for format completion only, they have given this part. Okay, in our exams also, in our inter also, I think we have not written anything in this format. Okay, so second one, if you observe, share application money pending allotment. Okay, assume you have just paid some application money, but still the company is not allotting shares to you. If the company have already allotted share to you, then that application money will be transferred to capital account. But since still the shares are not allotting, therefore they have to keep it, they have to disclose that in a separate line item which is called as share application money pending allotment. If you observe, after paying, within 60 days the company have to allot the shares to you. Okay, so during that intermittent period, the thing is still you are not the shareholder, therefore that money should not be appearing in share capital. So that is the reason why they will show in a separate line item, which is called as share application money pending allotment. Next, if you observe, just go through these items. Just go through these items. We will have something which is called as non-current liabilities. First one, long-term borrowings. Okay, deferred tax liabilities. Other long-term liabilities, long-term provisions. That's it. Only 4 items in non-current liabilities. Long-term borrowings, deferred tax liabilities, other long-term liabilities, long-term provisions. Just don't by heart anything. Next, if you observe, current liabilities, short-term borrowings will be there. Trade payables will be there. Here they will say total outstanding dues of micro and small enterprises. Here, total outstanding dues other than micro and small enterprises. They just want you to disclose separately how much amount is due to micro, small, medium enterprises. Other than micro, small enterprises, whatever the amount which is due. That bifurcation you have to show in your balance sheet. This they have mentioned. Next, other current liabilities, short-term provisions. That's it. Liability side of your old AS format is completed. Okay, the only thing which I want you to remember and observe is, here we have shareholders funds. In this, we will write both equity shareholders also and preference shareholders also. Is this point clear? Yes. Next, if we move to asset side. If we move to asset side is also a little bit bigger than liability side, but let us quickly check. Non-current assets, first we have to write. In that non-current assets, the first item will be PP. In PP, again we have to start bifurcation like tangible, intangible, capital work in progress. I will explain what is the meaning of capital work in progress also. Intangible assets under development. Next we have something which is called as non-current investments, deferred tax assets, long-term loans and advances, other non-current assets. Okay, just go through this format, that's it. No need to by heart anything. I will tell what we have to remember. Next, current assets will be there. Current assets may what we have to write: investments, inventories, trade receivables, cash and cash equivalents, short-term loans and advances, other current assets. Then we will get the total of the assets. Okay, fine. Now, it is very clear that balance sheet of those companies for which accounting standards are applicable, it will be starting from equity and liabilities portion. First we have to write liabilities, then after completion of these liabilities, next thing we will start with assets. Correct? This is the normal format which we have to study in our old intermediate days. But now the format is completely changed. Now the format is completely changed. First let us understand the balance sheet and then we will move to the P&L account. First read this part. Division 2. Division 2, Division 2, Division 2. It is applicable for which persons? Okay, first read, then I will explain. Read this part. If you read, you will understand. Division 2 of Schedule 3 talks about the format for which, if you are a company whose financials are prepared in accordance with Indian accounting standard rules, then for you Division 2 is applicable. Okay. Division 2 also, if you observe part 1 of the balance sheet, if you observe part 1 of the balance sheet will be starting with which item? Assets. Okay. AS wala balance sheet, what is the first item which we will start? Will we start with liabilities or will we start with assets? AS1. AS1 we will start with liabilities. But here in AS we have to start with assets. This is the first change which we have to understand. Okay. Assets, I will go into all these a little later. But once these assets are completed, come to equity portion. Okay. See, once these assets are completed, we have to come to equity portion. Equity portion, what they have did is, just a moment. Okay. We'll come to that equity, but before that, quickly check this assets part. Non-current assets, what is the first item which is there? Property, plant and equipment. Okay, second item which is there is nothing but capital work in progress. New line items are there. New line items are there. Next one, we are having investment property. This is completely new, which is not there in earlier format. Correct or not? Investment property is not there. Next, goodwill is there. Other intangible assets are there. Intangible assets under development. This is also completely, this is also fine. Next new thing is biological assets other than bearer plants. This is also not at all there in your old accounting standards. Okay, so highlight this thing, write this somewhere, biological assets. Right, I will ask one question, then you have to answer. Biological assets you have to write. Online students also you have to write somewhere the word biological assets. Next one, financial assets. Write the word financial asset also. Financial asset, biological assets. Next, investment property. Highlight these three things. Investment property, biological assets. Next, what is the next one? Financial asset. Okay. What you have to do is, one second, investment property, biological assets, next one, financial assets. You just have to do some research and you have to go through and identify and tell me what is the meaning of these three items along with few examples. Okay. You have to do some hard work. Just understand the meanings and then I want some examples also. Online students also have to do this. Examples plus meaning you have to do. Okay. So the next thing is you definitely have to by heart this format, because as I have said that you have to prepare balance sheet as per division 2 schedule 3. In order to do that, you have to definitely remember this balance sheet. Okay, but no problem. I will teach some shortcuts to remember this balance sheet so that you will easily understand. That we will discuss in next class. Okay. So in this class, what we have understood is we have not understood much. Sorry, we have not discussed much. We just have understood the meaning of financial reporting. Whatever the rules are there which are needed for the preparation of financial statements, we have understood. For some companies, accounting standards are applicable, and we have understood, sir, for some small companies only AS is applicable. But if I am a listed company, or if I am a huge company, if I am a listed company or if I am a large company, for me what are applicable? Ind AS are applicable. If I am an AS compliant company, I have to follow division 1 of schedule 3. If I am an Ind AS compliant company, I have to follow division 2 of schedule 3. This we have understood, and after that, what is the meaning of financial statements also we have understood. Okay. In division 1, we have only 4 components. What are those 4 components? Balance sheet will be there, statement of profit and loss, cash flow statement, and last notes to accounts. But if you observe Ind AS, compliant companies, all those 4 will be there. But in addition to that, we are having something new which is called as statement of changes in equity. This also I have not touched upon. Okay, so in next classes, coming classes, what we will be doing is we will be understanding the format of this balance sheet as per division 2 schedule 3. We will also understand profit and loss account format also. We will also have a little bit understanding of this statement of changes in equity also. So these 3 will be covered in depth. But before that, in next class, what we will be starting is, sir, why we are having 2 sets of standards? Because AS is also there, Ind AS is also there. The government, for some companies only, the government have not completely removed these AS. Okay, still these AS are also applicable. Sir, if there are already AS which is there, what is the exact reason of again introducing a new set of standards which are Ind AS? Okay, so those reasons will be discussed in the next class. Okay, along with these reasons, I will also explain you this balance sheet ka format also will be completed in tomorrow's class. Okay. So So this balance sheets format and this also will be completed in tomorrow's class. But we have to do this thing: investment property, biological assets and financial assets. We have to find out the meanings of these three along with few examples. At least 3 examples I want for each asset. For each item I want 3 examples. Okay. So on that note, let's conclude today's class and we will continue in next class. Okay. Good morning. In last class, what we have studied? We have just gone very little content only we have gone through. First, we have understood the meaning of financial reporting. And then we have understood there are few rules which are essential for the purpose of preparation of financial statements. And then we have understood what exactly is the meaning of financial statements also. And we have just started upon the format for balance sheet. So let's quickly check what we have discussed in last class and then we will continue. Okay. But before that, if you just go through these standard names so that it is easy for you to remember this. So let's once again go through the names of the standards and then we will start. So check. Ind AS 8 talks about if there is any accounting policy changes and if there is any change in accounting estimates and prior period errors, that is covered in Ind AS 8. So income taxes are covered in Ind AS 12. The same goes with PPE, so Ind AS 16. Okay, so like this, if you just revise all these names of standards along with standards numbers, just 5 minutes if you spend, easily you can remember. So no need to by heart. After completion of standards, you can easily remember. So next, if you observe, we have understood the meaning of financial reporting. So meaning of financial reporting as in, it is nothing but we have to communicate the financial position of an organization through the entity's financial statements, not only just shareholders, but to other stakeholders also, including management, creditors, government, etc. Okay. And then we have understood there are few rules which are essential for the purpose of preparation of financial statements. How many rules are there basically? 2 rules are there. First one is what? Companies accounting standards rules. Earlier they are released in 2006, but now they are amended to Companies Accounting Standards Rules 2021. Okay. In India, as of now, for some companies accounting standards are applicable, which means whatever you have studied at your CMA inter level, whatever accounting standards which you have studied, those are applicable for few companies. You can remember like this: for small companies, ASC is applicable. In today's class, we will understand what exactly are the companies for which these accounting standards are applicable. But if you are a company for which accounting standards are applicable, you have to prepare financial statements as per the format which is given in Division 1 of Schedule 3 to the Companies Act 2013. Since MCQs are there, these are little points where we have to focus. Okay, they may ask in MCQ also. If you are an AS compliant company, you have to check the format which is given in Division 1 of Schedule 3 to the Companies Act 2013. But Another set of rules which are nothing but companies Ind AS rules 2015. Because of these rules only, if you are a listed company and large company for which Ind ASs are applicable, then you have to follow the format which is given in Division 2 of Schedule 3 to the Companies Act 2013. Okay. Then we understood. Meaning of financial statements also we have understood. Earlier, whatever the accounting standards which you have studied, we have 4 components of financial statements. This we have already know that. Correct. What is the first component which is there? Balance sheet is there. Second one, statement of profit and loss. And third one, cash flow statement. Last, we are having notes to accounts. Same, all these 4 components are there even in Ind AS also, but the formats are different. But the formats are slightly changed. In the last class, we have understood balance sheet, old balance sheet will start with something which is called as shareholders funds. Correct? But new balance sheet starts with non-current assets, it is starting. Correct? Total format have been changed. We will slowly understand and try to remember whatever the format which is given in this Division 2 of Schedule 3. Again, I am saying this is not required for your exam perspective, but we have to understand. What exactly is the difference we have to understand. So next, the statement of profit and loss is same to same. Cash flow statement is also same. Notes to account is also same. Of course, with different. Format is little bit changed, but this statement is exactly same as what we have studied in the previous standards. But one new thing which is not there in previous accounting standards is nothing but statement of changes in equity. This is the new thing which we have to study. I did not explain all these things. We will slowly cover all these things in detail in today's class. But before that, you just have to understand something which is called as, okay. Next, keep the heading, History of Accounting Standards. History of Global Accounting Standards. History of Global Accounting Standards. See, if you observe the institute material or if you open that, it contains many details which are not essential. So what we will be doing is, this is a little bit dry topic also, like why exactly these accounting standards are introduced. What is the purpose? Earlier we are having accounting standards and now why Ind AS are introduced, and all these things are explained in this history. But first let us understand how exactly these global accounting standards are emerged, and then what India have did is most of the things it have copy pasted from the global accounting standards with some differences, of course. Okay, even in the accounting standards also it have did the same thing. So first let us understand what exactly or how exactly these global accounting standards are developed. So the first landmark here what you have to remember is, first you can write, then I will slowly explain along with you. Okay, so write the, sorry, IFRS, దానికంటే ముందు ఇంటర్నేషనల్ అకౌంటింగ్ స్టాండర్డ్స్ అవన్నీ ఉండేవి. సో ఫస్ట్ ఆ హిస్టరీ చూద్దాం. సో ఫస్ట్ ఇయర్ 1973 you have to remember, first landmark year in accounting. So in 1973 what is happened is, we have something which is called as IASC. IASC. The full form of IASC is nothing but International Accounting Standards Committee. International Accounting Standards Committee. It was formed by many countries. It was formed by many countries like US, UK, Australia, Germany, etc. Okay, see, way back in 1970s only, What all these countries have decided is, let us all assemble together and let us all issue a common set of standards which are applicable in all the countries. Okay, sir, why we should have common accounting standards in all the countries is, even in this 1970s, even in this 1970s only, many of the rich people are there who have lots of surplus. They are having a huge surplus amount. Now they have option to invest in different companies. For example, one investor want to invest in UK, another investor want to invest in US, Australia or Germany, etc. like this. So what is the purpose of having uniform accounting standards is, if I am a shareholder or if I am an investor, I should have the data of how exactly the companies are performing, correct? I have to check the balance sheet, I have to check the profit and loss account of all the companies which are located in different countries. But the thing is, if each of the country prepares its financial statements according to their accounting standards, it is very hard for the investor to make comparisons, correct or not? So in order to avoid this, what they have decided is, okay, let us all form together one committee which is called as IASC. And the purpose of IASC is what? It will issue one uniform standards which are applicable in all the countries, so that uniformity is maintained. Okay. So what they have did is, next let us write the objective also. Objective of their meeting is to issue common accounting standards across the world. Common accounting standards across the world. So next you have to remember, IASC board they have formed. IASC board. This board, what it have did is, it is only issued accounting standards. So this is nothing but standard setter of IASC. This IASC board only have issued uniform standards which are international. And you have to write one last point with respect to this, which is nothing but IAS are issued by IASC. IAS is nothing but International Accounting Standards. International Accounting Standards. Okay. So if you understand, it is very self-explanatory. You just have to remember these things because these things are little bit new to you. So what you have to remember is, just remember this year 1973. What have did is, most of the countries have formed together and they have formed one committee which is called as IASC. The purpose of IASC is very simple, to issue common standards all across the countries. Okay, so that is the reason why they have issued something which is called as International Accounting Standards. Right now we are not understanding with Indian accounting standards ka treatment. First let us understand how global accounting standards are emerged. Then we will understand how India have copy pasted those global accounting standards. Okay, so this 1973 is done. After that, what have happened is, another landmark year which we have to remember is 1989. Okay, in 1989 also, just write this IOSCO. IOSCO. The full form is International Organization of Securities Commission. International Organization of Securities Commission. See, in India we have something which is called as SEBI, correct? Like how India is having SEBI, international countries are having this organization which is called as IOSCO. The objective is same. Like how India is having SEBI, international countries have this organization which is called as IOSCO, International Organization of Securities Commission. We can write that point also. It is corresponding body for SEBI. Corresponding body of SEBI in India. Okay. Now what have happened is, it have started, it notified in order to encourage cross-border transactions Okay, what have happened is, around this 1989s, most of the investors are decided to issue, what should I say, issue shares, or if they want any finance, they are ready to issue, they are ready to raise the funds from different countries. Like this, cross-border transactions have become very, very common. So whatever the existing standards which are there, already we have these standards, but these are not sufficient exactly to meet the requirements in this 1989. So what they have suggested is, okay, we are not saying we don't have accounting standards, we are having, but these are not sufficient. So what we have to do is, we have to improve the existing standards. Okay, so the objective of this IOSCO is, it have decided we should have few cross-border transactions are happening. So what we have to do is, we have to improve whatever the existing standards which are there. Okay, so the objective of this thing is what? It have proposed that international standards should be improved. Internationally accepted standards should be improved. Okay. So first what I have did in 1973, this committee is formed. Many countries have assembled together and they have decided to issue one common set of accounting standards across the world. And they have started issuing which standards? International accounting standards. And then what have happened? Again in 1989 also they have met. And this time another organization is also joined, which is nothing but International Organization of Securities Commission. Sir, what is the role of this Securities Commission? It is nothing but corresponding body of SEBI in India. If any listed entities are there, how exactly we have to do those regulatory requirements and all will be explained by this IOSCO. Now what it is saying, okay, nowadays these cross-border transactions are very, very huge. These are undertaking in very, very huge volumes also, and figures are also increased. So what we have to do is, whatever the existing standards which are there, they are not sufficient. So we want truly global standards. We want more improvements in whatever the existing standards which are there. And then we have another set of standards which are called as IFRS. Okay, earlier we are having international accounting standards, but then again this body have proposed we want improvements in whatever the existing standards which are there. And hence what they have did is, we can write another landmark year also, which is 2001. Sir, here what have happened is, we have something which is called as IASB. IASB, it replaced IASC. It replaced IASC. From then, it had started issuing IFRS. It had started issuing IFRS. Okay, they have improved earlier international accounting standards to make them truly global. To make them truly global. Okay. So from 2001 onwards, what have happened is, we have another body which is called as IASB. Earlier international accounting standards are issued by which body? It is IASC, board is there. Okay, but now what have happened? Okay, IASB, another new body has formed and it have replaced existing IASC, and it have started issuing completely new set of standards which are called as IFRS. The full form of IFRS is International Financial Reporting Standards. Okay, so now what have happened is, this IASB have not completely deleted all international accounting standards. Some international accounting standards, if that doesn't need any change, they have retained the old standards only. But wherein new changes are required, they have started issuing new set of standards. Which means what? As of today, we have both sets of standards. IAS is also there, IFRS is also there. On one same matter, both standards are not there. If they have felt that, okay, if there is any standard which doesn't need any modification, they have retained the old standard only. Old standard means what? They have retained is IAS only. But if they felt like if they need any modification, they have modified and they have issued a new set of standard which is IFRS. Okay, this point we will write later. Now what have happened is, all global entities have started accepting IFRS. Have started accepting IFRS. From then, two sets of widely accepted AS have been emerged. Okay, first one, IFRS, followed by non-US clients. IFRS followed by non-US clients. Okay, and then what have happened is, US is there. US will never accept to all those things which are accepted by most of the countries. They always wanted to show their own superiority. They always wanted to show their own dominance. So in this also what have happened? Okay, you all other countries have, you can follow IFRS, but we US will not follow IFRS. They have issued their own standards which are called as US GAAP. Okay, US GAAP is also there. There are no much changes which are there between IFRS and US GAAP. Most of the things are pretty similar, but in order to show their superiority, US have not agreed to accept this IFRS. So what they have did is they have started issuing their own standards which are called as US GAAP. US GAAP followed by US clients. US GAAP followed by US clients. Okay, just for 1 minute, go through what we have written. Just to make these names little bit familiar, IASC, International Accounting Standards, IOSCO, what exactly this IFRS are issued by this IASB. Just go through for 1 minute and then we will continue. రావచ్చు జనరల్గా ఛాన్సెస్ తక్కువ, బట్ కొన్ని డ్రై ఎంసీక్యూస్ ఇవ్వాలి అంటే ఇలాంటివి పిక్ చేసుకోవచ్చు. Just for 1 minute, go through this, then we will continue. Okay, so we can add just one more last point. So this US GAAP are issued by one body which is called as FASB, Financial Accounting Standards Board. FASB will issues US GAAP. Okay, Financial Accounting Standards Board. Financial Accounting Standard Board issues US GAAP. So next point. Next point, keep the heading why India need global accounting standards. Why India need global accounting standards. Okay, see. First we have understood, sir, how exactly these global accounting standards are emerged and why these IAS are there, and how these IAS are changed into later IFRS and all we have understood. India is also there. In India also, if you remember, we have AS which are there already. We are having these accounting standards, correct? But India also, whatever the accounting standards which we are having earlier, if we still continue those accounting standards, it is very difficult for us to compete with global countries. Correct or not? So that is the reason there is a need. India have to move towards the global accounting standards. Okay. So let us try to list out some 4 to 5 points through which we will understand why there is a shift in India from accounting standards to Ind ASS, and then we will totally correlate that with Indian environment. So now write the first point. In India, cross-border transactions have started. Cross-border transactions are started. In India only, many billionaires and many millionaires are there. So what they are doing is, they are having too much of surplus funds. They want to invest in different countries. Indian financial statements are prepared according to AS. If these international accounting standards are not there in India, Indian companies will prepare financial statements with the old ASs. And if I want to make any comparison with foreign companies, they will prepare financial statements according to their own ASs. Correct? It will not make any use. It will not make any use. So what they are saying is, since these cross-border transactions are increasing, India should not settle with its old accounting standards. It should shift to something which is called as global accounting standards. This is the first thing. Second point we can write, flow of international capital. Flow of international capital. Okay, see, if I am an Indian company, if I want to raise funds, there are multiple options which are available. First option is what? I can raise equity share capital. Second option is I can raise preference share capital. Third option, I can raise debentures. Or if I want, I can just go to bank and I can get some loan. Correct? Now what have happened is, Indian companies are also there. They are expanding so much that even if they have raised the capital only in India, that is still become insufficient. Which means what? They want capital from other countries' investors also. That much Indian companies have already grown. If you want capital from other companies' investors, obviously other company investors have to understand your financial statements. Correct? If your financial statements are prepared according to accounting standards of India, how come they understand your financial statements? So that is also not possible if India is not moved towards global accounting standards. So if international capital's flow should be very easy, obviously your financial statements also should be increased. Your level of financial statements also should meet the global accounting standards. So that is the reason India have to definitely shift to something which is called as global accounting standards. Okay, just write the third point also. Difficulty in comparing financial statements of different countries. Different countries. Okay, this is self-explanatory point. If you want to compare financial statements of different countries, obviously everything have to follow uniform accounting standards. Correct? If India follows India's accounting standards and other countries follows their own standards, it is very hard to compete. It is very hard to compare. So that is the reason, in order to remove this difficulty in comparing the financial statements, we should have a common accounting standards. And the last point you can write, complex financial instruments. Complex financial instruments. Okay. So if any of you have taken SFM classes already, you can understand these terms which are called as derivatives. Okay, interest rate risk management, call options, put options, like this some instruments are there. Old accounting standards never know these words. They don't know the meaning of derivative only. If they don't know the meaning of derivative, how they will give the accounting treatment for derivative? That is not possible. Nowadays, most of the companies are using these financial instruments in their financial statements. If they don't know these names, what accounting treatment they will prescribe? Correct or not? So since many of the companies have started using these financial instruments, our standards should also provide the accounting treatment for all these items. It is not possible with the old accounting standards. So that is the reason why we have to issue new set of standards which are global accounting standards. Okay, this fifth point is also fine. Why India need global accounting standards? In India, cross-border transactions are increased. International capital should be freely flow to the country, and it should remove the difficulty in comparing financial statements of different countries. And last point, many complex financial instruments are there whose accounting is not given in old accounting standards. So that is the reason we have to move to global accounting standards. Next point, sixth point, Indian scenario. Now we will move to India. Indian scenario. Prior to the introduction of Ind AS. Ind AS. Okay, now try to understand. Sir, here what have happened is, in India also we have set up one body which is called as Accounting Standards Board, ASB. Its objective is to issue accounting standards. ASB's objective is to issue various accounting standards. Okay. Next, in inter level you have studied few ASS, correct? Can anyone know how many ASS are there in practice? How many ASS are there? Any idea? Later you can cross check, but now you can write this point that as of now we have totally 27 ASS. 27 ASS we are having as of now. Old ASS these are. Okay, 27 ASS in number we are having. ASS we are having. In India also, let us try to understand with the help of timelines. Okay, so let us start the first important timelines. Only 2 timelines will be there. So let us first start with 1977. 1977 only. ICAI formed this ASB. ICAI have formed this ASB. Sir, what this ASB observed is, it observed international accounting standards. It observed the international accounting standards and prepared own accounting standards. It observed international accounting standards and prepared own accounting standards according to the economic conditions of India. Economic conditions of India. Okay, this ASB have not formed new set of ASS. Whatever international accounting standards are already there, it have taken the idea from those international accounting standards. Of course, here and there few adjustments it have made according to the economic conditions of India. And it have started issuing its own accounting standards. So then what have happened is you have to understand one thing, that these standards are recommendatory in nature. These are not mandatory, these are only recommendatory. These standards are only recommendatory in nature. Okay. These standards are only recommendatory in nature. We can write the next timeline, which is 2006. These points are mostly self-explanatory, so that's why I'm not explaining much. So 2006, if you observe, one summit which is called as G20 summit. Okay, G20 summit. In this G20 summit, India said that India committed that it will follow international accounting standards. India said that it will follow international accounting standards. India committed that it will follow international accounting standards. But in 2006 only it have committed that it will follow international accounting standards, but actual implementation started from 2015. Actual implementation have started from 2015. In this year only they said that we will follow international accounting standards, but it is not that much easy that we can follow those standards from that year itself. It have just committed in 2006, but actual implementation is started from 2015 onwards. Okay. Next we can write one important point, that we have already written this point above, but in order to provide an interlinking, let us write once again, companies accounting standards rules 2006. Companies accounting standards rules 2006 mandated all companies to follow AS. Till then these standards are only recommendatory. Okay, but suddenly these rules are saying, okay, from now onwards, if you are a company, you have to definitely follow accounting standards. Next, we have understood another set of rules also, which are companies Ind AS rules. Companies Ind AS rules 2015. Companies Ind AS rules 2015 mandated all companies, mandated few companies, we can write few companies in brackets, listed or big companies, to follow Ind AS. follow Ind AS. To follow Ind AS. Okay, fine. Next. We can write one more point, which is 7th. Adoption versus convergence. Convergence of global accounting standards. Global accounting standards. See, if you are one country, if you want to follow these global accounting standards, they have given two options. First option is what? If you want, you can directly adopt global accounting standards. Sir, adoption means what? Adoption means complete copy paste. No changes, just whatever the content which is there in the global accounting standards, just copy paste that content. That is called as adoption. Convergence means what? You can take an idea of the global accounting standards, but we will make few changes which are suitable for our environment. Okay, we can either adopt the global accounting standards, or we can either adopt the convergence. We can either converge the global accounting standards. This you have to remember. Okay, so let us write that point. Any country can become IFRS compliant in two ways. First one, adoption. Adoption means exact copy paste. Exact copy paste of IFRS. Second thing is nothing but convergence process. Convergence means few adjustments depending on economic conditions. Economic conditions without changing the core idea of IFRS. Core idea have to be same. Without changing the core idea of IFRS. Okay, fine. Next we can write the last point, which is India has followed converged model of IFRS. India have not directly copy pasted. They have designed a new word for that copy paste. Okay, they have designed, India have followed converged model of IFRS. Converged model of IFRS with few carve-ins and carve-outs. With few carve-ins and carve-outs according to the economic conditions. According to the Indian environment, we can write. According to the Indian environment. Okay. According to the Indian environment. Carve-ins and carve-outs are nothing but something is specifically mentioned in the IFRS. Some point is there, for example, some point is specifically mentioned in the IFRS, but that thing India don't want to follow. Can it do so? Answer is yes. There are some other thing which is specifically there in which is specifically there in Indian environment, but it is absent in global accounting standards. Sir, can it do this point also? Yes, it can do this also. Some disclosure is there that is there in global accounting standards, but India don't want to do that. Like this also they can design our own accounting standard, or there is another point which is not there in global accounting standards, but India want to add that point. Like this also they can do. So addition or deletion of any item which is not there in global accounting standard is nothing but carve in and carve out. Okay, further discussion is there later, but as of now you can understand like this. If any new point is there in accounting standard, but it may not be there in India, it may not be there in international standard, or there may be one point which is there in international standard that may not be there in Indian standard. Like this also they can do, which means what? There is no need of directly copy pasting. With few modifications, we can follow converged model of IFRS to make them suitable for Indian environment. Okay, fine. One last point. This is a little bit dry, I know that, but we can't do anything. One last point. Numbering of Ind AS. Numbering of Ind AS. Numbering of Ind AS. What you have to do is just look at this. Just look at these numbers. Okay. Ind AS 8, 12, 16. Suddenly 116 is there. Correct? 21, 23, 36, 38. Suddenly 102, 108, 113, 115. Which means, sir, are we having, do we have totally 116 Ind ASs? Answer is no. Okay, see, what I have explained is, in practice, if you look at global accounting standards, see, currently we are having these international accounting standards also, and another set of standards are also there. What are those another set of standards? IFRS is also there, correct? So what India have did is, first we can write, then I will explain the point. India have retained the numbers numberings used by IASC in the preparation of international accounting standards. For example, we have something which is called as IAS 1. IAS 1, what they will say is presentation of financial statements. Just right, this is not there in our syllabus, but just to understand how these numberings are made. Presentation of financial statements. And then we have given the number Ind AS 1. Same content, presentation of financial statements. Presentation of financial statements. Which means what? Ind AS 3, for example, IAS 3, if it is there, India have given the same number which is Ind AS 3. If it is IAS 7, India have given the same number which is Ind AS 7. If it is IAS 36, India have given the same number, which is Ind AS 36. But suddenly what have happened, they have issued new set of standards, IFRS also. Correct? IAS is also there, IFRS is also there. For example, if IFRS 1 is also there, we are having IAS 1 also, IFRS 1 is also there, correct? In order to remove the confusion, what India have did is, if it is IFRS, it have started issuing the series with 100. If it is IFRS 1, what is the number which we have given? We have given Ind AS 101. If it is IFRS 2, India have given Ind AS 102. If it is IFRS 3, India have given Ind AS 103. Just to give a unique number, if it is IFRS, India have issued with a series of 100. But if it is International Accounting Standard, if it is IAS only, India have not changed it. India have just directly copy pasted that number. But if it is IFRS, India have issued the standards from the series of 100, just to make it separate. Okay. If it is 100 series, if it is there, for example, if you look at here only, this Ind AS 116 is there now. This is nothing but IFRS 16. This is nothing but IFRS 16. Similarly, if you observe this Ind AS 102, it is nothing but IFRS 2. If you check this Ind AS 108, it is IFRS 8. Similarly, Ind AS 113, 13, 115, 15. Sir, but what about this Ind AS 21? It is IAS 21, International Accounting Standard. Sir, what about IAS 23? Sorry, Ind AS 23, IAS 23. Like this we have to remember. Okay. So the last point, if you observe, but when it comes to IFRS, India have issued new series starting after 100. Starting after 100. Example we can write for that also. IFRS 1. IFRS 1, first time adoption of IFRS. First time adoption of IFRS. Second standard IFRS, sorry, Ind AS 101. Ind AS 101. This is also nothing but first time adoption of Ind AS. First time adoption of Ind AS. First time adoption of Ind AS. Okay. If you observe, see, these two are not there in your syllabus. These two are also not there in your syllabus. But just I have given an example. See, if you observe, only these standards are there in our syllabus. How many standards are there? I think 12. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12 standards are there in your syllabus. Okay. Only those we have to remember. But just to understand whether it is IAS or IFRS, I have given this example. Okay. If it is IFRS, Ind AS number will start after 100. But if it is IAS, India have used the same series of the old international accounting standards which are there. Okay. Let us write the last point also, that currently there are 23 IASs and 16 IFRS. 16 IFRS in total. in total. Okay, you can write beside this IAS that we have 1 to 41 standards. Earlier they have issued 41 standards, but some are deleted. Okay, but some are deleted. So finally we are having 23 Ind ASs. Some of them are deleted. Some of them are deleted. Okay. You cannot understand like this. Sir, if it is 23 IASs, it is not that the last international accounting standard is 23rd. It is not like that. That's what I'm saying. Totally they have issued 41, but most of the standards are deleted. So in total we are having 23 IASs. Okay. So just go through all the content for another 2 minutes. What we have written, and then we can conclude with only one part, which is applicability of Ind AS. But before that, just go through all the points. Another 5 minutes it will take. But just go through what all the things which we have written. From tomorrow onwards, we will discuss the balance sheet format. That is interesting. This is little dry theoretical topic. So that's why it may be little bore, but we can't do anything. This is very important to understand the background. Okay, just go through. Okay, fine. We will start applicability part in next class only. But before that, I think I have asked you to find out 3 items in last class, correct? What are those 3 items? Sorry? Biological assets. Next? Very good. Investment property. Last? Financial assets. Have you tried? Tell me what is the meaning of biological assets? Sorry? Living things. Okay. Humans. Oh, so animals and plants are biologicals. Okay. And we could assets say na, if they give the business. Okay. Any example where animals and plants will give business? Okay. Very good. Okay. Next, investment property. Investment property. Any example? Land and building given for. Very good. Which is generated the rental revenue. Last one, financial asset. Equity, yeah. Cash. Sorry? Receivables. Okay. Okay, fine. So these things also we will cover in next class. So next class what we'll be doing is this applicability, some 6 to 7 points are there. We will complete in next 20 minutes in the next class, and then we will start with balance sheet ka format. Okay. After balance sheet P&L. Tarvata Ind AS. Yes, after P&L, because OCI is there, which is completely new to you. Other comprehensive income that is not there in old accounting standards. So we have to understand that, then only we can move to AS, Ind AS. Okay. So 2 more basics classes are needed. After that, we will start with Ind AS. Okay. Chapter. Okay. So that's it for today. We'll continue in next class. Oh, tell it